In order to gain financial freedom, one must first learn the basic fundamentals of investing. We're talking about the core to building any kind of real long-term wealth. We're talking about investing. Now I know what some of you might be thinking. Investing? Isn't that for Wall Street guys in suits or people who already have a ton of money? And let me tell you, that's one of the biggest misconceptions out there. The truth is, investing is for everyone, and the sooner you start, the better off you'll be. Welcome to our step-by-step guide on how to invest your money. This is a beginner's guide to understanding the basics of investing. I get so many questions, DMs, comments, you name it, from people asking money mastery, how do I even begin? Where do I put my money? What if I lose it all? These are all valid concerns, and trust me, I've been there. When I first started, the world of investing seemed like this incredibly complex, intimidating beast. But here's the secret, it doesn't have to be. Once you break it down, understand a few key principles, and get a clear roadmap, it becomes a powerful tool that can genuinely change your financial future. That's exactly what this video is designed to do, to demystify investing and give you the confidence to take those first crucial steps. So, if you've ever felt overwhelmed by financial jargon, or if you've been putting off investing because you just don't know where to start, then you are in the right place. We're going to cover everything from why investing is so important to the different ways you can invest and how to actually get started step by step. My goal here is to arm you with practical knowledge so you can stop just saving your money and start making your money work. Stick around, maybe smash that like button for the YouTube algorithm if you're feeling generous, because this is information you really don't want to miss. So let's kick things off with the absolute basics. Why should you even bother investing your hard-earned money in the first place? It's a fair question. You work hard, you save a bit. Why not just keep it safe in a bank account? Well, the first, and probably most obvious reason people invest, is to grow their wealth. Plain and simple, investing offers the potential for your money to make more money over time. Think of it like planting a seed. With the right conditions and enough time, that seed can grow into a massive tree. Your savings account, while safe, typically offers very low interest rates, often so low that you're barely keeping up with the cost of living, or worse, you're actually losing purchasing power. Investing, on the other hand, allows you to participate in the growth of companies, economies, or assets. When you invest in a company's stock, for example, and that company does well, the value of your investment can increase significantly. This compounding effect is incredibly powerful over the long term. It's not just about getting rich quick, though. That's a dangerous mindset in investing. True wealth building through investing is usually a marathon, not a sprint. It's about consistently putting money into assets that have the potential to appreciate, allowing your capital to work for you even when you're sleeping. This growth can then be used for major life goals: buying a house, funding your children's education, enjoying a comfortable retirement, or achieving financial independence sooner than you thought possible. Another huge reason people invest is to beat inflation. We'll dive deeper into inflation in the next chapter because it's that important. But for now, understand that inflation is like a silent thief that slowly erodes the value of your cash. If your money is just sitting there, not growing, it's effectively shrinking in terms of what it can buy each year. Think about it. If prices for goods and services are going up by, say, 3% a year and your savings account is only giving you 0.5% interest, you're actually losing 2.5% of your money's value every single year. That might not sound like much initially, but over a decade or two, it adds up to a significant loss. Investing aims to generate returns that are higher than the rate of inflation, thereby preserving and ideally increasing your real wealth. Let's talk about something that impacts us all: inflation. It's the silent thief that eats away at your money's purchasing power. Inflation is the rate at which prices rise, reducing currency value. That $100 bill today buys less in the future. Imagine $10,000 saved with 3% inflation. It loses value over time. After 10 years, it's worth only about $7,440 in today's money. Investing is your primary tool to combat inflation. Okay, so we've established why you need to invest to grow wealth and beat that pesky inflation. Now let's get into the what. What are the actual things you can invest in? It can seem like a whole new language at first, with stocks, bonds, funds, and all sorts of other terms. But don't worry, I'm going to break down the main categories for you in a way that's easy to understand. Think of these as different tools in your investment toolbox. First up, probably the most well-known investment type: stocks. When you buy a stock, also known as a share or equity, You're essentially buying a tiny piece of ownership in a publicly traded company. If you buy a share of Apple, you own a very, very small fraction of Apple. As the company grows, makes profits, and becomes more valuable, the price of its stock will hopefully go up, and so will the value of your investment. The potential returns from stocks can be quite high, especially over the long term, as you're participating in the success of businesses. However, they also come with higher risk compared to some other investments. Company fortunes can change, stock prices can be volatile, meaning they can go up and down significantly, sometimes very quickly. So, while the upside is attractive, you need to be prepared for potential downsides too. Many successful investors build a core of their portfolio with stocks. Next, let's talk about funds, specifically mutual funds and exchange-traded funds, or ETFs. These are incredibly popular, especially for beginners, and for good reason. A fund pools money from many investors and then invests that money in a diversified portfolio of assets, which could be stocks, bonds, or other investments, all managed by a professional fund manager or by tracking an index. The beauty of funds is instant diversification. Instead of trying to pick individual winning stocks yourself, which is really hard even for pros, you can buy a single share of an ETF that, for example, tracks the S&P 500. By doing that, you're instantly invested in 500 of the largest US companies. This spreads out your risk. If one or two companies in the fund don't do well, it has less impact on your overall investment compared to if you only own those one or two stocks. ETFs are my personal favorite for most people. Then we have bonds and gilts. When you buy a bond, you're essentially lending money to an entity, which could be a government bonds, or gilts in the UK, or a corporation, corporate bonds. Alright, so you're getting excited about the potential of investing. But hold on just a second. Before you invest, there are crucial things you need to have in place. Skipping these steps is like building a house without a foundation. First, you need an emergency fund. This is non-negotiable. It's for life's unexpected curveballs, a job loss, medical emergency, urgent car repairs. Without it, you might be forced to sell investments prematurely. Your emergency fund is your financial safety net. Build it first. Second, understand your risk tolerance. Be honest about how comfortable you are with market volatility. Third, adopt a long-term mindset. Investing is a marathon, not a sprint. Okay, you've done your homework. You understand why you're investing and you're committed to the long game. Now it's time for the exciting part, actually getting started with investing. The first step is to open a brokerage account. It's easier than you think. A brokerage account lets you buy and sell investments. Think of it like a bank account, but for investments. Many online brokers make it easy to open an account. Do a little research and pick one that feels right for you. Once your account is open and funded, you're ready to start investing. Start with index funds or broad market ETFs for diversification. You don't need a fortune to begin investing. Many brokerages have no account minimums, and you can buy fractional shares. Alright guys, we've covered a ton of ground today. From the fundamental reasons why investing is so critical to understanding the beast, that is inflation, exploring the different types of investments out there, the crucial checks you need before you start, and finally, the practical steps to actually get your investing journey underway. My hope is that you're feeling a lot more confident and a lot less intimidated by the world of investing now. Remember, this isn't just for the experts. It's for everyone who wants to build a better financial future. Investing is a powerful tool for building wealth, but it requires research, patience, and risk management. By understanding different investment options and starting with a solid plan, you can work toward long-term financial growth. It's not about timing the market perfectly or finding the next 10-bagger stock overnight. It's about consistent, disciplined action over time, letting the power of compounding work its magic for you. The journey of 1,000 miles begins with a single step, and today, you've learned how to take those first crucial steps. So, what are you waiting for? The best time to start investing was yesterday, but the second best time is right now. Take this knowledge, start small if you need to, but start. Your future self will thank you for it. And hey, if you found this guide helpful, do me a favor and smash that like button, subscribe if you haven't already for more content like this, and share it with someone who you think could benefit. Would you like recommendations on beginner-friendly investment platforms? Let us know in the comments. I'll see you in the next video, and if you're serious about changing your finances, then watch this next video on your screen.